is why Zomato actually has turned profitable. They have definitely controlled costs very well. They have done very sharp advertising. They have done very specific innovations. For example, the integration of district, the vegetarian mode, the healthy mode. These are all consumer needs, right? Especially on FMCG brands, to look at penetration and equity. And what we found is that, very interesting, that if I'm losing relevance, then in a couple of years I will start losing penetration. If I'm losing difference, then I will not grow. So you need real good quality data to build LLMs. You need good quality data to create synthetic data. So before jumping into the bandwagon of LLMs and synthetic data, be sure that the data on which it is being built is good, solid data captured through solid, interviewing techniques, etc.
What's your favorite childhood memory?
Actually, eating Maggie. I can't help it, but it is.
Hello, fellows. Welcome to the next episode of Jagged with Jasravi. Subscribe to my channel for conversations at the edge with thought leaders from the marketing, branding, and the business world. Conversations that ignite new ideas with rough and sharp edges. Hello, Soumya. Great to have you on my show.
Thanks. Great to be here as well, and looking forward to a very productive conversation.
Soumya is Managing Director and Chief Solutions Officer, South Asia Insights Division, Kantar, with decades of experience, and the BrandZ Report 2025, India's most valuable brands, that we are going to focus on in our conversation today. So, Soumya, let's start with the headline, which is slightly making me uncomfortable. Last year's BrandZ India reported 19% brand value growth. This year, it is 6%. Now, we are saying brands can outperform market conditions. So what is really happening? How would you explain this for the CMOs to appreciate and put it in perspective?
So I think first, it's not such a bad news. GDP has been growing at about 6.5%, and brands, the top brands, are also growing at the same pace. And to that extent, yeah, they are keeping up. There are certain strong brands outperform market, no denying that. But when there are category headwinds, it becomes a bit challenging even for the strongest of brands to outperform. They just have to remain resilient. And I think we having some headwinds with consumers' discretionary income being under stress, consumption being under stress, a lot of the growth being created through government investment rather than private consumption. I guess it has turned a corner now, and we should see much better results next year. Yeah, but it's a challenging condition.
Yes, sure. So how would you explain TCS? It grew 16% last year and it maintained its position. What did they do that the 66 decliners did not?
TCS, in fact, has been on a growing momentum. They haven't done so well this year. And that's again because of the macroeconomic uncertainty, and as well as TCS generally for B2B tech, one of the things we have been calling out is the consumer equity has been eroding, and it has become a lot more price centric, and which is what will impact B2B as a sector, B2B technology as a sector. So HDFC, by contrast, I would say is a great story because it's been in our top two for a long period of time and consistently grown value. It has got category tailwinds. Financial inclusion is being promoted by the government. Banking is increasing. They have innovated, and they have maintained a very consistent brand image. Their equity is strong. They're set up for future as well, is how I would put it.
Right. So, if we could talk a little bit about the methodology, how does the methodology ensure that it is capturing the brand equity and not the brands riding on a category wave? Because we will be talking about our star performers, Zomato as well, and that is really interesting. But, so for our audience to really appreciate that this is all that it needs, but it's so difficult to deliver on.
So it captures both actually, because so it starts with the financial value, which has a strong component. Actually, a lot of it is about the multiples or the financial valuation. So it does, therefore, to that extent, mirror the investors' confidence in the brand and the sector. After that, it builds in through the survey that we do among consumers and decision makers, it builds in the consumer equity. Now, normally speaking, consumer equity is about 30% or one third of the total financial value. In strong brands, it could be as much as 50%, but in weaker brands, it could be as low as 15%. So, to that extent, financial valuation does make a lot of difference. So, the investor's confidence does make a lot of difference.
So there is a financial value, there is a consumer confidence, investor confidence. So it captures all the key anchors of why a brand is important, rather the most important asset, and why it pays in the short term, in the long run, every aspect. So let's look at your brand, Zomato, which has shown 69% growth.
Yeah, it has.
Taj Hotels, 55%, and Mahindra, 53%.
Yeah.
So are we saying that these brands are actually meaningfully different and you would have to go a little bit into it? Or are they just well-funded, well-distributed and riding trends like experience economy, SUV demand? So what in the methodology ensures BrandZ is not just capturing money well spent on marketing and capturing genuine brand differentiation or distinctiveness?
Yeah. Okay. Let me also be a bit provocative to say money well spent on marketing creates consumer equity. So I would rather have a lot of money, very well spent on marketing. Having said that, so
we get into that as well. Yes.
Yes. Yeah. So these three brands. Now, experience economy is a consumer need. Finally, now if I'm a brand that is in the experience economy zone, which means I am providing experience to consumers, because that is a need that consumers after the couple of years of COVID, that is the need that is coming through, and therefore I am in the right space. So one of the very important part of building consumer equity is also to understand how are consumers evolving. So all the three brands that we spoke about have the benefit of the consumer's need to experience things. And that's something where they're sitting. Now, within that, they have both the investor confidence and consumer confidence. So they are meaningfully different to their consumer set, and they are able, and which is why Zomato actually has turned profitable. It's not only because of funding, right? I mean, it's because they have done things they have definitely controlled costs very well. They have done very sharp advertising. They have done very specific innovations. For example, the integration of district, the vegetarian mode, the healthy mode. These are all consumer needs, right? So they have done that. They have integrated it, and they are a strong brand in the consumer's mind, and investors are showing faith in the brand. So I think it's just a coming together of both the things. Now, if they don't continue to grow in the consumer's mind, that will be the challenge. So you can't be static. You have to continuously grow to maintain your place.
Zomato is also being heavily regulated right now, and the stocks are volatile. So, how does this all come together? A, B, Mahindra. So, what is the timeline for difference to convert to value? Because that is another thing, when marketers say it's long term, okay, when am I going to start seeing results? Because BrandZ report shows that the brands that have built extra equity have really been resilient. I mean, if they might not be growing, they'll rise back, they'll bounce back quickly. So what is the timeline for difference to convert to value? And for Mahindra, is the difference coming from EV pivot or from 20 years of Mahindra-ness, or from both?
It's coming, Mahindra has been building for quite some time. It's coming from the fact that they sort of reinvented the SUV space. Then, of course, now EVs. So there has been it's not one thing. I think it's not about one specific silver bullet. It's like continuously being associated with innovation. So is Royal Enfield, a brand we should talk more about. That's also, again, a very continuously innovating brand. And communicating in the right way to the consumer, and in that sense they have been set up. To your point on what is the time frame, Now it depends on category to category, right? I mean, there are categories, and you said it very well, by the way, that many of the FMCG brands, the fact that they have maintained their space despite the kind of headwinds the sector is facing, despite the squeeze on consumers' discretionary income, itself shows how strong these brands are. So it's not just about growing value, because sometimes investor confidence will help you grow value even when your consumer equity is not strong. It's about when investors start losing confidence, then is your consumer equity helping you stay in play, not simply from BrandZ ranking, but actually in the market? Because finally, if you are there in the market in a sustained way, building profitability, building volume, you are generating funds to fund the consumer equity. So I would say there is no specific time frame. So we have done some analysis, especially on FMCG brands, to look at penetration and equity. And what we found is that, very interesting, that if I'm losing relevance, then in a couple of years I will start losing penetration. If I'm losing difference, then I will not grow. So relevance prevents degrowth, difference aids growth. That is the way to look at it. So if I'm different, I'll grow. If I'm not relevant, I'll drop. So I need both the pillars to grow. And I definitely need to be relevant to stay in the game. So in FMCG, it will happen faster. I mean, if I'm a monopoly, it will take a long time, right? For even if consumers don't want me, I'll still remain. So it depends category to category.
Innovation is such a big factor in
Right.
building that meaningful, difference. If you could explain what is the MDS, structure, what is that framework? And a lot of strategists, swear by it and use it. So what is it? Because, what you said about FMCG, now it's like 3% growth. And the reality is such that they have to discount. And, like Rama Bijapurkar says, this is our cultural reality. We are promiscuously brand loyal, So, and of course, the aspiring class is growing at a different rate. And,
Right.
they are growing the masses are growing at a different rate. So what does this, what does that really mean? Meaningful difference, how is it achievable for the FMCG brands? Like you said, it differs by category. And what is meaningful difference?
Yeah, so let me take the first question. What is meaningful difference? But before that, let's take one step back. What do you need to do in the market from a consumer standpoint? So Kantar has something called blueprint of brand growth. And in a nutshell, what it says is you need to continuously build predisposition in the consumer's mind, and you need to continuously do it in more and more people. So it's not enough if I make you predisposed. I have to make many of you predisposed on a continuous basis. How do you build, and why is predisposition important? Predisposition is important because when the opportunity comes, your chances of picking up your brand is higher. The dice is loaded in your favor. How do I build predisposition? Our framework of building predisposition, which is MDS, it's a very intuitive framework. It says first is I should come to your mind when you are going to buy the category. I should be there in your mind, right? If I don't know you, I won't buy you. That's one first thing. The second is I should be relevant to you, to meeting your needs, and you should have an emotional connection with me. And the third is I should be different from others in the category, and I should shape the category. So all these are consumer associations, and the role of the brand is to reinforce these associations continuously. Now, to be relevant as a coffee brand is very different than to be relevant as a biscuits brand. To be relevant as a coffee brand, I probably have to remind you every morning you wake up. I'm there. I'm going to recharge you. I'm going to whatever. That's one. If I'm a biscuits brand, then it is about tea time, snack time. I'm the right fit for it. Now, there could be different ways, but that is what the brand's proposition is. So that's how you build relevance, and that's how you build meaning. So I think one of the things that marketers need to do a lot more of is to understand what is that proposition and how do we consistently execute against it, and keep measuring, keep monitoring whether these simple associations that I spoke about, this simple framework, am I gaining on that? It's not enough for me to be static on that, because many brands are coming. I need to continuously build more and more meaning, more and more difference. So yeah, I mean, we are a bit disloyal in that sense, as you are saying, because we will flirt with brands, But I should be in the position when I'm flirting also, my brand should have the dice loaded in its favor. I think that's the simple thing that a marketer can do.
Very beautifully, you've said that the meaningful is not just relevance, it's also about the emotion. And that which is going to build and affirm the memory structure in the brain.
Correct.
Because you've talked about cultural resonance in micro moments, which I don't know if we can get in today, but we'll definitely, at another time we will do.
Sure.
So we are talking about the influencer AI reckoning. Now let's 50% of India's ad spend is, social commerce and influencers. So AI is also shaping every part of brand building. And if I'm quoting you right, you said that we might be in the last years of classic brand building. So, AI is getting into ideation, creative media. And we also see that the difference, the meaningful difference in equity is declining as per the report. So how do you, advise CMOs for their playbook? Because, organizations are still forming their policies about how to use AI, and AI is developing so fast. So how do we get the right KPIs in perspective? Which KPIs really matter? Because you've used an influencer, you've got immediate returns, but is this going to help my equity in the long run?
I think one of the things that we consistently advise everybody, CMOs included, is that we are living in an era of signals. There are lots and lots of signals, right? I mean, influencers, creators, you have your social commerce. So there are a lot of signals that you get. Attribution is very tough. Everybody has their own last click attributions, but there's no single consistent measure. You need to have a total picture. I think the point we say is that all these signals have a role to play. There is no one single KPI, right? Your one single KPI, it could be share gain, for example, it could be penetration, but otherwise, among the signals, there's no one single KPI. Each one has its role to play. And what you need is a framework. How do these signals go to build meaning? How do these signals go to build difference? So if I'm using tons of influencers, what is my strategy in using them? Am I trying to use them to say, look, I'm a new age brand, I'm continuously innovating? Or am I using them to build reassurance, reaffirmation, validation? What is the part of this framework in which they are fitting in? Or am I using them to create visibility? So we just need to be clear that, see, what we are offering is a framework. You be meaningful, be different, be salient. How you do this, what we just discussed are routes to do this. What is ending up happening is the route is becoming more important than the outcome. And that's the challenge. So let's not get so fussed about AI. AI is an enabler. AI will allow us to activate these routes in a more efficient way. But AI is not going to control the outcome. So as long as we are clear in the outcome and the concept, AI and humans can work together beautifully.
Yeah, own the guardrails in the right way,
Right.
for the right things. Okay.
Absolutely.
So let's get to our star. Brand star is the Zomato, right? The fastest riser for the second year. Am I right? 69% brand value growth, climbed 10 places to 21, nearly doubled to 6 billion.
It's the fastest riser this year for sure, which is 69% growth, and 6 billion, which is huge. And I was saying Zomato, I think has it's in the right space. Consumers are, as I was saying, experience economy. Consumers want to experience things. They want small treats. They want enjoyable moments. They want micro moments. You are playing in the right space. First thing is, as a category, I'm playing in the right space. So I have category tailwinds, and then tons of continuous innovation that they're doing. District, all the vegan, health mode, all the stuff that they're doing, and very witty, sharp communication. So you don't need very heavy communication. You don't need tons of ads, but the way they engage with their audience continuously and consistently is brilliant. And they activate micro moments also very well. I mean, festivals, this, and you're just continuously activating. I think what they're also doing very well is internally they have become more efficient. They have therefore become more profitable. So they are also getting the investor confidence to that extent at the point at which we took the cutoff, which was July of last year, which is when we took the cutoff. They were doing well. So I think investors tend to be a bit volatile. Consumer confidence and the consumer mode, it actually makes a lot of difference. Yeah. So actually, you are right. They were top risers for 2 years in the running. You're correct. 100% and 69%. So, yeah,
Wow.
fabulous
So,
performance.
so, so they're getting the brand personality voice right. They are being consistent. They are being agile, and they have captured the cultural consciousness in the right
Yes.
space. So
Yep.
the category archetype is right, and they are just being, and of course, they are in the right space in the right time.
Correct.
Because women don't want to cook that much, and that everybody's
I
empowered.
think the right
All that.
space, right time are very critical because one of the things we tell that you may be stuck in a space today, you have to keep finding new spaces. Now, if you're in the right space, obviously you still have to find new spaces, which is what they're doing now. I mean, the fact that quick commerce, and so you have to keep finding new spaces. You can't, only stick to your core, especially if your core is getting constricted.
Yeah, and that reminds me, Soumya, David Acker has written a lot about subcategories and how sometimes innovation is just forming your own subcategory, and that is innovation. And because you are the leader there, it's sort of
Correct.
like a niche, but it's related to where you are.
Absolutely.
Um, Okay, what are the early warning signals? So like you said, the brands are tracking themselves. Some of the brands. What is an early signal that maybe your weightages of spends is a little tilted towards short term, and of course, because it shows up in the long run later, you don't really realize. Is there any analysis like that?
I think first is short term repeat. Repeat is a very clear example of it's very easy in India to acquire customers in any category. You can discount, you can just be present and social. Acquisition becomes important. Repeat is not so easy. Depth is not so easy. So the moment if you're in a constant acquisition mode, which is actually the cash burn mode, you start realizing that you're not building emotional connections, you're not getting people back through your product, and that's when I think a lot of brands need outside in view. We are becoming very inside out because we are because of all these surfeit of signals. Brands and obviously I come from insights background, so I think brands should talk more to consumers, should measure more among consumers. What is happening is all these signals are making a lot of brands just, I know what's going on. And that is the start of the end. Unless, of course, you don't want to scale your brand. You want to be a small brand and then you want to get good valuations and then you want to sell. Then there's no problem. Then just keep doing that. But if you want to build a sustainable, profitable brand, then at some point you need to start monitoring among consumers and you need to get an outside in view of what's going on.
Mm, mm.
But the earliest signal, if you ask me one number, is the fact that if are you getting repeat consumers or is it just constant acquisition mode?
Did the consumer find value
Yeah.
enough to come back as compared to competition as well? So one brand in India, some rapid fire questions, Soumya. One brand in India you'd call the smartest brand builder right now, and why in 10 words?
I think Zomato, by the way, since we spoke so much about it, because you use the word smartest, it is definitely a smartest brand builder. I don't think Zomato spends tons of money on advertising, but they have just got the right what I want to stand for as a brand and how I want to execute against it. Bang on.
One habit Indian CMOs should stop doing this year.
I mean, don't keep looking at dashboards. Go beyond it. Ask the why and
Mm,
not the what.
mm. So that will mean a lot of qualitative kind of work as well, will it?
Yeah, absolutely. But the qualitative also now has become I go and talk to four of my neighbors and two of their neighbors. That's not qualitative. And even quantitative, if I talk about many Indias, I mean, even primary quantitative work, which by the way, our government is doing more than brands are doing. You need to go and meet, you need to capture primary information, is the way I would look at it.
How do you see AI in research what is the wise usage of AI for research? Because that is also, let's get the personas, let's get some synthetic data, and we kind of okay. Now let's just take the next step.
You need real good quality data to build LLMs. You need good quality data to create synthetic data. So before jumping into the bandwagon of LLMs and synthetic data, be sure that the data on which it is being built is good, solid data captured through solid, interviewing techniques, etc. Which is, by the way, what Kantar does. So it no problems in using AI, but use it on solid data.
And then validate it, if so far, the LLMs are not there, even if you've done initial understanding and formed your hypothesis with
Then go and validate it.
you go
Go
and
and
validate
validate
with
it. Go
real,
and validate.
again, consumer data.
Yeah, because if you feed in consumer data, LLMs become bigger, better, and better and better. But when things are changing so fast, real consumer, it's real plus AI. AI cannot replace real.
Yeah, yeah. One category in India that is ripe for disruption in the next 24 months.
Next 24 months, one category. I mean, all of them are getting disrupted, aren't they? I mean, fully. I really think a large food brand, a really large, there are a lot of these splintering happening in F&B. A real big food brand, a real big alcohol brand. These are the two categories I think we need something happening.
Why do you say that?
Because I mean, if you think of experience, right? It's about going out and experimenting and experiencing. So there's a lot of experience stuff happening. Food is very experiential. So I think there is scope for a lot of food and alcohol are very experiential. So a lot of scope for disruption in that,
Okay,
vodka brand, and I don't know.
got it. Yes. Rama or Byron Sharp, whose frameworks matter more in India, for India?
Rama, any day. And there's no question, right? It understands the complexity of India. It understands that India needs patience. It understands that there is no one frame fits all. We try to simplify the world. There's beyond a point you cannot simplify the world. And that's what I like about Rama's philosophy and frameworks. Yeah.
Yes. And so data validated and supported,
Yeah,
so
absolutely.
original. Okay.
Absolutely.
I found another fan. Great. So Soumya, last thing, you sit on more than a decade of BrandZ data, showing meaningful difference collapsing in India. So what is the uncomfortable truth about Indian marketing that the industry does not want to hear, but desperately needs to act on, starting Monday morning?
You can only extract that much value from your consumer. You have to start adding and giving value back to your consumer. I think that's the uncomfortable reality.
So awesome. So value. Let's just define that also.
So I think we have been into this game of by extracting value, I mean taking up pricing, expecting them to pay more, create balance sheets to some extent, right? We have become too obsessed with because of the way our stock market is a fluffy stock market. Our valuations are way too high. So what that means is you are under constant pressure to deliver profitability. You're not getting the time or the money to develop the category. India is a volume game. We have to develop India in a volume way. You have to develop categories. And so this obsession with stock market and everyday fluctuations is probably not allowing us to unlock value that is lying with the consumer.
Most overrated marketing metric today.
We spoke a lot about it. I think Gen AI it's not a marketing metric, but the way we are talking about Gen AI, very, very overrated. I also think search signals are very overrated.
Should I or not? This is rapid and this is fire. If alternate profession could have been?
I wanted to be an actor.
Oh, lovely. Okay. What would you do on Mars for fun?
I would do nothing, have a break, have a Kit Kat.
Okay. As per your partner, your most often used phrase.
Let me be.
One thing no one knows about you.
I have a very contrarian streak. I don't know if they don't know or not, but I have a very contrarian. Whatever you tell me, I want to say the opposite. That
Lovely.
is the challenge a bit.
A book you'd like to gift to all your friends.
I am into literature, like proper literature. So I mean, I think we need to read more in general. So one of the books that I really love is War and Peace. It just tells you about culture in the most expansive way. I would love everybody to read.
Lovely. What would you tell your 18-year-old self?
My 18-year-old self that experiment more, don't stick for a predictable life.
What's something new happening in your life right now?
BrandZ right now, by the way.
What's your favorite childhood memory?
Actually, eating Maggie. I can't help it, but it is.
If you were to devote the rest of your life to philanthropy, what cause would you choose?
A woman, right? I mean, building just grooming girls to participate in the workforce.
Awesome. What is your greatest joy?
Just to read, just to find some time to read without thinking about anything.
How would you like strangers to remember you?
Someone who was a rebel without any cause.
God is going to hand you over one. What is a lesson that took you a long time to learn?
You can't fight every battle, and you can't even win one of them. I mean, you just can't fight every battle. Pick your battles.
What is one missed opportunity you wish you could have a second chance at?
I wish I could have shaped this industry, insights industry. I could have played a bigger role in being able to shape it, which needs taking a bit of risk, which is a regret.
No, you're going to do it now. Yes. Okay. What is your jagged edge? Which means a gift that in its raw form is a contribution to the world.
Being able to challenge norms, being able to challenge the world. Yeah.
Superb.
Yeah, loved it, loved Jagged, and a lot of fun. Very interesting questions. So it's not just a lot of fun, very interesting, very provocative questions. And it's just fun to hear somebody so intelligent and has perspectives on multiple things and can be so much fun.
Yay. Soumya, we are going to meet again.
Sure.
Yeah, thank you so much for
Thank you.
finding time, and I wish BrandZ, can reach all those who need it and
Sure.
can make the relevant takeouts for themselves and shape
Absolutely.
their
Thank you.
strategies going
Thank you.
forward.
Thank you.
Thank you so much.